What is the homestead exemption? It is a tax break. It does help you save on taxes in your home, and the exemption removes part of the value on the home and from taxation, and thus lowers your taxes. And I'll give you an example of that. But different counties have different exemptions. In Fort Bend County, you're looking at about 20%, plus the mandated exemption for school taxing unit of $25,000. Okay, and I'll show an example on how this works. I don't know if everybody can see that, but basically, if you look over here, the appraised value, the full appraised value of this particular home is a little over $1 million. Okay, so what you see over here, the taxable value in the drainage and the Fort Bend general tax has been reduced by $211,000. So that's about 20% of this full number of 1.057. So that's why you're showing a taxable value of $846 over here, because they've removed $25,000. And then you see over here for the school, Fort Bend ISD, you get a break of $25,000 off the value. So again, to be clear, you're not saving $25,000 on your taxes. You're getting $25,000 less in value that you're taxed on. So you combine all of these, and that's how it makes up the homestead exemption. Okay, and different counties have different exemptions amount, but Fort Bend is 20%, and again, the state mandated exemption is to get an exemption of $25,000.
Big misconception is think.
Yeah, that's what I was right. That's the biggest misconception that I've known to man. Is that everyone says if you file for your homestead exemption, you're going to get 20% off your taxes.
Yeah, that's not.
And it's not the case. So because we hear it all the time. I know Morgan, I hear it all the time. So it's very important to understand that if you were to sum up all these numbers and then do the aggregate, it's more like an 11% overall. If you end up looking at what your homestead exemption is going to be based upon a traditional homestead exemption, because you also have different exemptions like over 65. You have a veteran's homestead exemption. You've got some disability exemption. But that's probably the biggest thing. Is I hear some people will end up saying you'll save 20% by homesteading, and then a year later they call you up and say, I haven't saved 20%. What's going on? And it was just said wrong. So you got to be very careful about that. Yes.
Yeah, it's a taxable value that gets reduced. The tax rate does not change.
Right.
If you're 3.2 tax rate, that stays the same. The taxable value if your home is
you can see over here, the tax rate is still the same. It's just that the value that you taxed on has gone down a little bit.
You had a question, Mike?
No, I was wondering if that's the tax rate or what the effective tax rate becomes.
No, this is the actual tax rate.
Yeah,
That's the actual tax rate in this neighborhood, and then you just get some exemptions amount based on that formula.
Correct. That makes sense?
Make sense to everyone?
Tax rate does not fall. Taxable value goes up.
How long does it stay in effect?
So when you put a homestead exemption in place, as your primary residence, it stays with you, right? So if you move to another place, well then, and that's your primary residence, well then you'll have to file another one.
So that's correct. So you have to file it one time when you buy the home, and then it stays in place until you sell or buy another home that's primary residence.
But you can only have one homestead exemption at a time in your primary residency.
Correct.
Yeah, that's correct, because you can't have multiple homestead exemptions, because it's intended, I'll get to the criteria, but it's intended for primary residences, your principal residence, so you can't just go place them everywhere.
So in the MLS, at the bottom of it, it always says what the taxes were last year. Most cases, it's without exemption, right? So when I'm talking to a prospective client, is there a shortcut that you use to say, should I say maybe 10% off that if you have it, this was your primary, is what you're looking at?
Yeah, that's a fair ballpark.
Yeah, it's probably a fair number. Usually the easiest way, to be honest with you, is go to like HCAT or Fort Bend County Appraisal District. Just look at the actual tax bill itself.
Yeah.
And you can usually access that pretty fast.
Yeah. Because they don't put it, because everyone's exemptions are different.
Yeah. And I'll just make one more note on that. If you go by MLS numbers, the agent is inputting that in the numbers, right? So they might be putting the wrong numbers.
I've seen it already,
They may be putting from the prior year.
Yes.
So you're better off going to the actual appraisal district website or looking at Realist so you can see the updated tax numbers.
Yeah.
Because don't rely on the other agent to put in the correct numbers. Okay. So other exemptions, Chris, but you have over 65 exemption, disability exemption, 100% disabled veterans exemption. So all these exemptions are basically on top of what we initially talked about, which is the residence homestead exemption. So, you might get 10,000 more off the taxable value, 50,000, 100,000. There's different formulas for all these different ones. The main one, of course, is the one we just talked about, but there's other ones that apply as well. So if you're working with clients who fit in these criteria, keep that in mind because they may or may not be aware of that. Okay, benefits of the homestead exemption. So we talked about the property tax savings. That's of course the big one. That's what everybody wants. You also get a cap on value increasing more than 10%. This is also important in areas where prices are just skyrocketing. I remember a few years back, when the new construction really started booming, especially in the Riverstone area back in 14 and 15, they wanted to increase values much, much higher than what was actually going on. So by having this cap in place, what would happen is the Fort Bend County Appraisal District could only go up a certain amount, even though the house value may have gotten more. So it does protect you in terms of capping the amount of increase in the taxable value. And then protection from creditors to prevent forced sales. Of course, there's exceptions to that rule and what's applicable and whatnot, but as she alluded to earlier, there's some protection for that with the homestead as well on your primary.
Is the cap like 10% every year, or is it like just 10%?
No, it's 10% from the previous value
From the
year.
previous
So each year it can
Each
go
year it
up.
can
So
go up,
eventually
okay.
it will catch up with you, but at least in that initial first or second year, you have some protection from it just skyrocketing.
To break it up, make it easy. If you buy a home for $100,000 in year one, and in year two the value goes up to $150, they can only increase the taxable value of the home from $100 to $110, even if it's sitting at $150. The following year, they'll increase by 10 more percent, $11,000, which would make it $121, and 10 more percent, 10 more percent, 10 more percent. So the cap is 10% through life till you have that homestead exemption.
Until they kind of catch up to each other.
But
They
what happened
keep-
in trend?
Sorry, they keep track of that.
Yeah, they'll keep track of that in the system. So it'll
But they'll
actually
keep
show it
track
in the
of
bill.
what your natural market
Yes.
price
And
is.
you see auditors, in first year 100 to 150, and third year 160. But we've also seen drops in the market where it goes from 160 to 130, right? The previous year they've gone up to 140. Now the market value, price value is 135. They'll actually reduce it.
Oh.
So they look at the previous year's appraised value of the home to determine are you getting a tax up, same or tax down.
Yeah, but what will happen is they'll show you what they want to appraise you at, but then they'll show you what you're getting taxed at based on that 10% cap rule.
Yeah.
It'll show that on the property tax bill.
Which is why you always want to advise your clients, though, every year you can test their property appraised values every year.
That's a very key point. Do you know the concept of contesting? Does that even make sense to anyone of you? Yeah. Who understands that concept? Jose? Joe? Go share with us.
If you do not agree with the property evaluation, you can get comps and contest what it is based upon the comps in the neighborhood.
Fair enough. That's a great point. So what it means is that when you get your tax bill, the tax man is expecting you to pay that bill, even if that tax value is not aligned with market conditions. It's up to you as a homeowner or your clients to go up and challenge the appraised value. That's why you guys come and say, you know what, client, I helped you buy a home a year back as a value-added service on before the tax homestead exemption is filed. I'll do market analysis for you, give you certain comps which will determine whether the value is right or wrong. But the homeowner has to go and contest it. They can, of course, hire a third-party company who does it for them. But if you don't contest, they'll keep the tax value there. And consistently, you have to go and contest every year just so that you keep the tax value based on market conditions. Make sense?
I can tell you from personal experience, the contesting is not. It's not like something that's a losing battle. It absolutely works.
Yes, yeah.
Because and Harvey is a great example of that. Right there, valuing things in Ireland that flooded almost to our house,
Right.
and as this ridiculous value, and it lost most of its value. So
Right.
we had to contest it even through a natural disaster.
Correct.
Yeah, so it totally worked.
Yeah, I mean, the property tax appraisal thing, in my opinion, is a big racket. They just throw things out there, and they just expect half the people will contest, half the people will not do anything. But when we've had properties, I've gone and contested them, and it hasn't been that difficult. And literally, we've gotten reductions anywhere from $50,000 to $100,000+ sometimes, just by going. Some of these, new constructions or this and that. I mean, they can be a little out of control. So just by showing up, you can save thousands and thousands of dollars.
It's not a cumbersome process.
And it's not a
It's
cumbersome
really not.
process.
It's pretty simple.
As long as you have a case, you show what you paid for something, or you show some comps, they'll just look at it and, they may disagree with you and you have to come to a meeting in the middle. But sometimes if you paid something, the best case that you have is what you actually paid for the house, right? And if you paid $450 and they've appraised you at $500, you show up to your appointment with that $450 closing disclosure, and then they'll typically just move it to that, right?
You also don't have to have the CMA to do that. You
Right.
can contest based on deferred maintenance.
Right.
You can contest based on depreciation. There's other aspects you can contest on. So the big misnomer is, well, my whole neighborhood might be going up, so why am I going to contest? But I'll give you an example. There was a lady one time that we told to go contest. She was an older lady living in a very nice neighborhood who had tons of deferred maintenance. It was an older home on the inside. It had tons of deferred maintenance. It had damages from multiple floods that that didn't flood the whole thing, but damages. So she was able to document that aspect, go in there and contest it, and show if I was to sell this home today, it's not worth this. And she was able to get a massive reduction based on that.
Right.
Yes.
No, absolutely. So we can have another, meeting about this and talk more about that. But absolutely, it's a good topic to kind of be aware of as well. With this, that protesting, because that's another thing that's happening in the springtime. Maybe we'll talk about that next week. That's another thing that's going to be happening soon, as well as the values come out. Okay, so requirements to file the homestead exemption. So you're aware, your principal residence of January 1st of that tax year. Okay, so if you just bought a home last week, you're not going to get the homestead exemption for 2019 tax year. You will have to wait until next year because you're living in the home as of January 1st of that tax year. So this is applicable to people who bought homes last year. So again, folks that you've helped buy homes, last year, you should reach out to them. Hey, just want to remind you, in case you haven't done it, please file your homestead exemption. And we've done this in the past, and people are like, oh my God, thank you for telling me, I completely forgot. That kind of thing. So make sure they're aware that they have to file it, and is it their principal residence of that year.
So the first bullet point of that year, tomorrow afternoon, our team is gonna have a power hour, correct? Maureen?
Yeah, send an email.
From 11 to 12. So those of you who don't know about it, all the realtors, we're gonna sit together in a bullpen, including myself. We're gonna make prospecting phone calls. Past client, current clients, whoever you wanna call. That could be a good point. If this is a client that you sold a home to last year, when you make the phone call, hey, this is O'Neill with the Settlers team, I helped you buy a home last year. I'm here calling you up to remind you about your homestead exemption. The deadline is coming up. What can I do to assist you? Touch point. So you could use that tool tomorrow when we do the power hour.
Okay. So driver's license or your Texas ID must match the property address because they want to make sure you're living at that home, so they want that identification, as well as the vehicle registration. Again, the homestead is for principal residences, and this is how they check to make sure that that's your principal residence. Deadline for the homestead exemption is April 30th. So we have a few weeks left, so make sure people are aware, and if anybody bought a home last year, they should do it themselves, of course, that they file the thing by the deadline of April 30th. And where to file the homestead exemption. So I pulled up the Fort Bend Appraisal District website. It's over in Rosenberg, right off of 59 on BF Terry Boulevard. And of course, if you're in Harris County or other counties, you can file at that appraisal district. There is no cost to file a homestead exemption. Sometimes people get solicitations in the mail that there's a fee for this. There is no fee to file a homestead exemption on your primary residence.
Do you have to do it in person? Can you mail it?
I was saying, you don't have to do it in person, you can mail it as well.
Yeah, you can mail it in.
And I advise that.
Huh?
I advise that.
Yeah.
That place is very depressing.
It's one part of the point about, companies send you letters, and you have several of our clients send us documentation of that, send pictures. I got a letter from Fort Bend Appraisal District. They need me to file homestead exemption. There's a fee of $50, $100. There is no fee. Ask your client, send you a picture. You'll see at the bottom of the page, fine print, it will say it's a private company. So there's no cost of filing it. When you reach out to your client, proactively tell them, hey, you are going to get letters from ABC company. They're going to ask you to pay a certain fee. There's no cost for doing it.
Yeah, so that's it. Any other questions about homestead?
We good?
We're good.
Awesome.